Thank you for joining us for another episode of RM Smart Investing Weekly Market Analysis. I hope everyone has enjoyed their weekend so far. This analysis is for March 23rd, 2024. So this week, we're going to review the upcoming events and some of the factors which affect the markets. Now, one of the things was last week, as you know, the big news was Chairman Powell and the FOMC meeting. And more importantly, it was about the dot plots. What is the outlook for coming months and actually years regarding the rates? So we will look at the dot plot in our lesson of the week. So I hope you can join us for that. Also, we are gonna have a short week. It's Good Friday on this week, so the markets are closed for Friday. Generally, what happens, just from history, a lot of times we get reversals the week after, or the, the after the previous week, in a sense that if the markets were up strongly, the week of the short week is usually opposite. So it might be a little digestion this or consolidation this coming week. Also, the big news is the inflation numbers that the PCE numbers that really Fed watches. So we have that upcoming this week. The other thing is end of the quarter. So yeah, just think about the window dressing. It is the end of the month, end of the quarter. Just think about all these portfolio managers who do not have NVIDIA, for instance, in their portfolio. So how would they react? Last week we talked about Bank of Japan, Monday and Tuesday. Well, they didn't really disappoint the markets in a way that they came and really, we call it a regime change in the sense of their thoughts. So for the first time, they were the last bank with the negative rates, and now they have moved on. So we discussed that we will look at this again in our lesson of the week, or the emerging markets. The other thing is there's a lot of banks now moving to the rate cuts. Now, United States is not there, being the largest. Obviously, everybody's watching us. Euro said that the ECB wants more information, but Swiss National Bank was the first really developed bank that actually they cut the rate. So we will also review that in our emerging markets. These are just more information for you in the next three. We're not gonna go in depth, but just be aware that Chipotle is going to for a stock split 50-for-1. So this is the first time since their IPO since 2006 when they came as an IPO. So that's a big move. If we've had lessons on stock splits and how they affect the future. So just if you like, you can visit these lessons. Also, we had probably the hottest IPO in a while is the Reddit IPO happened, and it was received initially well, but then we had the reversal. So we can follow that. One of the interesting things is after the earnings we've had the last few days, a lot of luxury stocks or luxury good stocks, if you put Nike in there, you know, if you have a $400, $300 shoes, they had correction. Lululemon was down over 15%, and we had Louis Vuitton, for instance, or LVMH. So they were down. Now, the question I will have is there anything changing in the luxury side and the consumer behavior? So this is just something you can think about that as far as, you know, upcoming months. Is it consumer behavior changing? So with that in mind, we'll move on to economy. As I mentioned, the last week was that Wednesday, that 11 o'clock Pacific Coast time, the rate decision. And as it was anticipated, the Fed left it unchanged, but the markets loved it, and they had a great reaction, and mainly because of they uh, felt that Chairman Powell was more dovish. Although it still didn't make any changes, but he did come up with the suggesting that there will be 3 rate cuts. Although there's still some members are not 100% sure, and that's why we will look at the dot plot in the lesson of the week. Other than that, this is where we've been. This was the 5th time that they have left it unchanged. So this is, I thought, this really is a telltale sign where we have been and where we are now. As far as upcoming week, I would definitely encourage you as far as what is happening. Basically, we have the final GDP, and basically this is important, especially if you're looking at the 3.2%. And on Friday, we want to look at although the stock market is closed, but the core PCE numbers will be coming up. So you want to pay attention to that. So that's what the Fed pays attention at 11:30 a.m. East Coast time. Fed Chair Powell will speak. So these are some perhaps market moving. We also have the revised University of Michigan consumer sentiment on Thursday. So again, we will actually discuss this inverted yield curve. We've been discussing this on, I think, for quite some time, and we'll see whether historically did we make any historical move this week. So as you can see, again, we're still in negative yield curve when it comes to 2-year and 10-year spread. Of course, 30-year and 10-year is in a positive slope, but still 2-year and 30-year is negative and inverted yield curve. So what kind of week was it? It was a fantastic week. It was a great week for the market, all-time highs. Russell is trying to hit the December highs, but other than that, all the markets came up, and then Friday we had a little bit of correction besides NASDAQ. The other ones did go down. NASDAQ was up. Today I decided to change it a little bit. Wanted to look at different ETFs, and the reason I want to say that I'm going to share this, because like S&P 500, when we used the spider, they were up 2.23%. S&P 500, the Vanguard's S&P 500 was up 1.95%. We also have the ProShares S&P 500, and they were up 2.08%. Of course, the hero was NASDAQ. They were up 2.87%. And then the Dow was up 1.95%. Now, the RSP, which is the equal weight S&P 500, and that's the reason I want to share this with you. So compared to SPY, is almost 0.9% lower, so it was up 1.35%. But as a whole, the week, the markets were up nicely 2.27%, and kind of a universal in a sense. As far as the sentiment, again, this is as a Wednesday, right, when the Chair Powell and the FOMC coming up, you can see we're still above the average, pretty positive on bullish sides, but still pretty positive in this kind of a bearish side. We are below the average. When we look at the CNN fear and greed, we are getting close to that extreme greed. And then even the Citigroup panic euphoria, we see we're pretty close to that euphoria area. We've been stuck in that 0.33 area. So we want to watch these sentiments. So that's what I share with you. So as far as the chart goes, I go back again. This is we look at the August of 22, and then we bottomed in again looking at the October 2020. I'm sorry, it's August of 23. 2023 and then October of 2023 when we bought them. And I'm looking at the extensions, and you can see we've been talking about this 5,100, 111, and the basically it has become a support. We look at the 8-day exponential moving average and look at this beautiful trend. Since we broke above that 21-day exponential moving average, or it has been the support, it has been uptrend, it has been a nice support, and now we are actually getting to the 238, and that's 5303, which we touched it. So basically that's the resistance, but we are on an uptrend. Whatever we do, as I mentioned, this could be a week that we might want to come and kiss one of these moving averages, maybe even this support line. But other than that, we still don't have much as far as like thinking of is the blow off top, for instance. The only concern I have last week, again, we're talking about the Fed, and we are looking at option. We have the weekly option expirations on some of the major stocks, but the volume was pretty soft. So that's one concern that I have, the volume, the interest. As far as, again, the charts, we are not embedded quite yet. We are overbought right now. We've been touching that Bollinger Band in but there's no extremes, and MACD is pretty flat. You see the Bollinger Band's kind of narrowed, and then they're trying to open up. So again, not much of an indication on that. On a weekly basis, though, we still embedded. That's good news. So the MACD is up, so the trend is up. We just touched that Bollinger Band, and I've been saying this for the last few weeks, and I think one of the things about technical analysis is, especially when we look at the momentum indicators and this, and when we look at the trend, we see that on a weekly, on a long-term basis, things like this will save you from the whipsaws. And for instance, if you are up here and you say, well, we are overbought, well, you would have missed all this move. So, and we did have that resistance at 4,800. We passed that. You can see how we stopped there for a while, but then we went up, and our MACD was positive and our stochastics were positive. So that's what, I respect our charts. Now, on the other hand, we looked at NASDAQ last week. Where did we go? We had a little weakness. We talked about NVIDIA, and we noticed that we came below the 18-day moving average and this week, and then we reversed. We hit the Bollinger Band. We became oversold, and now MACD is crossing. So what happened? That 2-bar confirmation, I think it's important. So even you can go with 3 bars. So you see how we just reversed. We just closed above that 18-day moving average. Now the Russell, as I mentioned, still trying to get to that December highs. It hasn't hit it yet, but it hit the resistance at the Bollinger Band, and we are sitting right on the 18-day. We were oversold, bounced from the Bollinger Band, and now came to the other side of Bollinger Band, and we see how the bands are narrowed. Now, one of the things you have to remember when you think about the Russell 2000, the small caps, they do have a good portion of them, or it is a major effect on them, is the regional banks. So when regional banks get affected, it affects the Russell 2000. As far as the Dow, it's been strong, but we did go outside Bollinger Band, so we had to reverse. We are overbought. MACD is pretty flat in the positive trend, but they've done, we're talking all-time highs again on the Dow. On a weekly, we see, well, we don't see any problems. We are just crossed at 80, and that's all we need, one of the lines crossing, but it's at 79.95. So that's still embedded. I usually like to see if it goes below 79. then that's a warning sign. And then the MACD is now, it's about to kiss, but we're still above that 18-day moving average. So we'll see what happens this week as far as is any indication of maybe consolidation. We talked about transportation last week. Right here, we had broken down below 18 days. And what we did, we went outside the Bollinger Band, and then boom, we just came back. We were oversold. Now MACD is about to cross, but we are having resistance at the upper edge of Bollinger Band, and the bands are pretty narrow right now. So we'll see. It could go either way, but that was good news for the markets that to see the healthier transportation index. And VIX opposite, when the markets were started going up, especially on Wednesday, which was a really good day, the VIX came down, but we're still at that support. The VVIX, we talked about VVIX that it was up, but every time you see we go outside the Bollinger Bands, we generally correct. So when something like this happens, excuse me, that means that the markets will like that. So the volatility will calm down, but we are oversold at this time. So the interest rates, on the other hand, are sitting, we did go climb up, but then after, so after the little peak, now we are sitting right on the 100-day and 18-day moving average, and we are overbought. So that's good news, but we are in a support. So we'll see if this reverses, or will that keep going down, which is, again, that would be good news for the markets. The opposite is with the 10-year note, and we see the 10-year note is going against the resistance. We are oversold. So can we break this, or the rates are going to reverse? So the same thing when we actually looking at the 30-year bonds, we actually have gone above the 30-year, 100-day, and we're close to that 18-day moving average, and we are oversold. So maybe this will carry the 10-year notes up. And when we look at the dollar, it has had a really nice move. Now, one of the things about the dollar, now you would think, well, the Fed was dovish and the rates could go down. So how would that help the dollar? Why the dollar is up? Well, remember, as I mentioned, there are many central banks have come out and they in a rate cut move. So the dollar is becoming relatively a higher interest rate compared to the competitors or the currencies out there. So that has helped the dollar. So we've had this nice reversal. We have gone up, but now we are hitting the upper Bollinger Band, although we are above the 18 and 100-day moving average. On a weekly basis, I want to take a look at it too. We see we are above the 100-week moving average, and the Bollinger Bands have really narrowed. So we are a little overbought. So we'll see how that will go. Would we consolidate at this point? On the other hand, we see that euro had the opposite effect of, obviously, the dollar broke below this 100-day moving average, but now we are oversold. All the momentum is going down. We are hitting the Bollinger Band, so we'll see if the Bollinger Bands open up, and that means the dollar will get stronger. Although, again, Lagarde has come and said that they're still not ready to cut rates, but they need more data, so they're on hold. But the sentiment in Europe is getting more towards the rate cuts. As far as the British pound, last week we were discussing that we did go outside this Bollinger Band, we came down, and then this past week we broke below that 18-day moving average, and now this is a very crucial point where we are now with the British pound. We are about to break the 100-day moving average. So we need confirmation on Sunday night or Monday what's going to happen. The trend and momentum is down. So we want to watch that. As far as the gold has had a beautiful run. We have hit the all-time high. But also, I want to remind you that these round numbers, the 2,200, for instance, that those are the things that for whatever reason, psychological reasons, there's always like profit taking, and the gold likes to move in $25 increments. So, but we still have some support at 18-day moving average, although you can see the divergence. We are actually moving down. The momentum is down, and MACD is about to cross. But we can still go down here and still be an uptrend in a way of way the market has gone. But this 18-day, we want to watch this. And also, this is a big reflection, of course, what happened with the dollar. On a weekly basis, though, that's another technical reason. You can see that the stochastic is overbought, and we did go outside that Bollinger Band, so we needed a lower correction. So we just came inside. As far as the silver has had a really nice move, touched its Bollinger Band. Now, again, we are sitting on 18-day, but we are momentum has shifted. We are at MACD's about to cross. So we want to watch this and the dollar together. It's almost like a double top here. So let's keep a good close eye on that. And copper it was on really nice run last couple of weeks or the week before. And we see we did go 1, 2, 3, 4 outside the Bollinger Band, and finally we came inside. Now, there's a lot of idea is about the supply issues. It was a China story with the lunar and year, and now there's some concerns about the supply issues. But this week again, more with China, and then maybe global slowdown. The markets kind of corrected a little bit. So as you can see, the momentum is down, although MACD still the trend is up. As far as the weekly, you see that we just on a weekly basis, if you follow again long term, you see that, oh, well, we did go outside the Bollinger Band. We also broke above the 100-day moving average, and we're still above that, but we came just inside that Bollinger Band. And we are right now, we are overbought. So we want to take a look at that as far as next week goes. Now, Bitcoin, what has happened with Bitcoin? We were embedded all the way to last week. And then we mentioned, there is always some type of a profit taking. Then we hit the all-time high, that almost double top. And if you go back analysis, when it was about $52,000, we felt that we could go to that 60, 70,000 area, but there will be some profit taking. As a matter of fact, this past Thursday, it was the largest outflow from the ETFs of the Bitcoins. I mean, this has been a tremendous move. So we just broke under 18-day moving average. So the momentum and trend is going down, but we do have the support in the Bollinger Band. So we want to watch this again, a little bit of a dollar story as well, but we want to take a look at what happens. And that brings me to the weekly. See, on a weekly basis, we had 3 days, and where did we go? We as I mentioned, this goes back to 2021, October, November time. You see, we hit that double top, and we were outside Bollinger Band. So we're just correcting that. We are embedded, so we'll see what happens. This week will be a crucial week. And again, I believe there's a lot of profit taking at this moment. And remember, April 20th is that halving will start. So, and then crude oil had again, last week we talked about, as we will see on a weekly basis, hit its resistance, went outside Bollinger Band. Now it's coming back in, but still above this 18-day moving average. Although it's became overbought and momentum is down. MACD is pretty flat. But see, on the weekly basis, we are hitting against that 100-week moving average. So we'll see if we can break. The Bollinger Bands are narrowing, so we'll see if there's going to be any move from that. Last but not least, and this we talked about, I just want to share with the driving season coming end of May. We had this beautiful run on uh, Reebok gasoline. So we had 1, 2, 3, 4, almost 5 outside Bollinger Band. Let's see how we just came back inside. But we still embedded. MACD is still positive. So watch for that if you're following the gasoline prices. Now, the expected moves, things were very interesting. What happened on Wednesday? This year alone, we've been pretty orderly. We generally don't, not all, the last year was quite often we went outside our expected moves. This year, I think this was the 4th time out of the weeks that we've started this year. And this was one of them. Wednesday after the FOMC, we just broke out. So that, and we hit all-time high. And so it was interesting. And it was the expected move was like about $81. The same thing happened in NASDAQ. And what happened in Russell, we did go outside and then we corrected, as I mentioned, it was more of a regional bank story. We came back inside the expected move. Dow did the same thing, was outside. These are, a little of a gamma squeeze there. And then the bonds behaved well. They stayed inside and hit the upper edge. And then on the other hand, the dollar, as I mentioned, they had a strong move after Wednesday, and they came outside. Gold had a nice move on Thursday, but then reversed and came back inside. And silver was the opposite. It did go up, but then came and closed right on the lower edge of the expected move. And the same thing with financials. And that's what I mentioned, financials, the regional bank, they had a reversal on Friday, and they sat right on that expected upper edge of expected move. Energy has been doing well. You can see this nice run, what we've had, and they just respected their expected move and stayed in the middle. So this concludes our first segment, and we will do our second segment, which will be on emerging markets and lesson of the week. Thank you so much for your attention.